But we've got Ajay Srivastava joining in on the show.
Oh, absolutely. So let's invite him on the show. Ajay, it's always a pleasure having you on the show. Thanks for taking the time today. I have to begin by asking you the first thoughts on the RBI decision. You just heard from the governor as well. How are you reading those initial comments? And of course, we're going to get to the 21,000 mark in the Nifty as well in just a bit.
You know what? Every time I listen to this RBI governor, I think of my grandfather. He makes us feel so happy, comfortable, that the world is safe, you are fine, go enjoy your weekend, and that's so perfect at the end of the day. So forget the nuances of the policy. The body language and everything is so in command and control that it's truly, truly impressive. And I've seen a number of RBI governors which have come, which have been dealt with, but this guy really takes the cake for just giving you the right comfort at the worst of time, at the best of time to say, life is good, go enjoy your Friday.
And I know, Ajay, you were going to enjoy your Friday. Good morning.
Yes, we deserve it, don't we? 21,000 there. We have done a lot of hard work to take the index up, so we deserve it, right?
Absolutely. Ajay, we're starting the show a little late, and we wanted to do this at 11, but we're doing this now with you with us. So I want you to listen to this next. I mean, we're putting the story out, and this is. I think something that you will want to comment on. You want to come in, quick thoughts on this story?
I think it's a great thing. I think it's a very difficult climb for the investors of GMR airports, and now it's an inflection point. So people who invested long back have struggled, Prashant, to be honest, to make a decent return out of this stock. Till it got demerged out of GMR infrastructure, still it's been a struggle to get a return out of it. But I think this is now we are reaching inflection points in most stocks. An inflection point, when I say, is mass participation by people coming into the niche stocks. Airports are crowded, and contrary to what I think most people think, and you said, the earnings are not coming from the landing fee. The earnings are coming from the real estate, which goes with this airport. So if you look at Delhi airport, is a phenomenal real estate. If for Goa, the real estate is still coming into play at this point of time, which is a part of the GMR group at this point of time. So I think it's becoming a quasi more than just the airport. It's becoming a huge real estate play as those incomes start to kick in into this one. The passenger traffic is what it is, but the real money lies in the real estate and the retailing that they're selling out to. And if you come to Delhi airport, you realize that how many hotels are on that plot, which is adjacent to the airport, and the kind of income and the asset that has been built into it. So it's a great real estate long-term play. I think it's a great India story, because at the end of the day, the real estate next to airport will always climb in value. So you're taking two punts on that one, real estate as well as the airport.
Really, you step into an airport, I mean, it's chock-a-block, isn't it? Any time of the day, morning, evening, night, I mean, it's just complete boom happening there. Ajay, actually, my colleague Yash spoke with the GMR CFO just a few days ago, and he spoke about the Delhi airport, what they can do in terms of pricing, the airport sort of charge that they have, I mean, debt reduction plans, etc. So we'll just play 2 minutes of it, and coming back to you, Ajay. Yes, stocks, by the way, moved up a little bit more, about 11.5% or so. Ajay, thanks for staying on. So from here out, with 21,000 on the Nifty, how does one make money? I mean, if you're invested and it's a great time, you're seeing portfolio values go every day, but fresh allocation, where does one do that?
I think, Prashant, two things very important, which I told my team, is to find and kill the laggards in the system. Because if your stocks have not performed even at this level and they've lagged market seriously, you need to have a real reason why you're keeping those stocks at this point of time. So more than what you want to buy, I think this is an inflection point where you say, okay, what I need to sell and generate capital for the next phase. And the next phase is very clear. There's no need to move out from the theme that you're there. The railway stocks will continue to thrive. They are the smaller stock, easy to buy, market price to go up pretty fast. And your infrastructure, of course, the story is playing out. You don't need to exit. If you can add. If you can't add, just wait a while, I think. And as you rightly said, all the sectors which are in the higher end consumption side at this point in time, which you can buy into, which is whether it's airlines or airports or hotels, five-star hotels, at the end of the day, that segment you can buy. And important is what you don't buy. I think what you don't buy at the end of the day is retail. You just stay away from it. The retail garments business for textiles, you stay away from it. We have said even the multiplex, you just stay away from them. That's not going to give you the returns. So I think this is going to be an interesting market, where it's not going to be what goes up or goes down. I think it's going to be about backing your ideas and backing them to the hilt. This is not the time to take smaller bets in large stocks. This is the time to take larger bets in smaller number of stocks. because a lot of stocks will not going to perform. As I said, I don't think retail will be part of the India's next 12-month stock market story. I don't think so. Consumer facing a lot of stuff like multiplex would be part of it. But monopoly, yes, I think that will be part of the story. And I think capital goods will remain the biggest sector, I think, for India's growth. Defense, less said the better. Everybody owns it, or if you don't own it, it's going to heartbreak not to own it. So I think you just focus and continue. Don't change. I don't think anything changes in what RBI's governor has said. And as this policy continues, as we mentioned last time in all interaction, NBFC is out for the time being from your portfolio till the RBI governor gets comfortable with the unsecured portfolios. So you really don't want to fight against a policy. And last point, commodities. We have seen very clearly two big initiatives of the government on the sugar side. It's killed the stock market for the sugar guys, the stock prices. It's come with the onion thing. So let's be honest that till the elections, this government is not going to let the prices go up. So if you're betting on companies which are commodity, everyday use companies, those prices are not going up in a hurry. You need to be staying out of it.
That's very well put, Ajay. Thank you very much for joining us and enjoy your Friday.
Thank you very much. You too.
Thank you very much for being with us here on CNBC-TV18. Well, 60 points on the Nifty. We are off from the day's high by about 40 points. So 21,000 came. We're at about 20,964. Take that quick commercial break here. More coming up on the other side.
CNBC-TV18.